terms of global cues, the largest cue that came in was the October consumer price inflation numbers in the United States, and that saw a strong uptake. 6.2% growth. When you look at it on a year-on-year basis, that's a good 30 basis points higher than what was anticipated. That's the largest annual increase in terms of CPI since 1990. The monthly increase was 0.9% versus the estimated 0.6%. Why has this come in higher? Largely due to two factors. One is housing continues to remain extremely hot in terms of pricing, and there seems to be an energy crunch within the system, and energy prices continue to go higher. When we exclude food and energy inflation, despite that, inflation is still higher than estimates. Core inflation stood at around 4.6% when you exclude food and energy. So that continues to remain high. President Biden joined in calling for tackling inflation as a top priority, clearly signaling that inflation continues to be a concern, and more so now after the October data has come in. Economists continue to question the need for stimulation, though, given that a 6% growth has come back, but despite that, the Fed continues to be dovish with regard to its stance on economic policy. Tech stocks obviously led the sell-off due to adverse inflation data, which is well above the Federal Reserve target. Bank stocks saw a bit of a jump, a little less than 1%, as investors anticipated a boost in profit due to higher interest rates. And of course, there are supply chain and labor shortages which continue to mar and continue to be a problem with regard to inflation. When you look at the Dow, it was down around 2/3%, clocking its second consecutive day of losses. The S&P 500 too was down around 4/5%, but the Nasdaq fell over 1.5%, in fact 1.66% to be precise, in trade on Wednesday. Moving on to Europe. Europe painted a very different picture. European stocks closed higher on Wednesday following strong earnings from especially media and energy companies. The DAX and Stock 600 both gained marginally, while the FTSE was up nearly 1%, especially after strong earnings declared by the retailer Marks and Spencer. Moving on to Asia. Asian stocks slid in early trade on Thursday, obviously driven due to US inflation, while the Nikkei as well as the Shanghai has gained. But outside of Japan and China, indices seem to be sliding. Australia is down almost 1%, the ASX 200, and Kospi is down almost 0.5% as we speak. The Shanghai is up 0.5%, and the Nikkei is up 0.75% as we speak, and the Hang Seng is down 0.1%. So slightly differentiated with regard to the Hang Seng and the Shanghai. Of course, Hang Seng more of tech. When you look at commodities, the London Metal Index rose around 0.4% in trade yesterday. Oil prices fell after reports suggested good US inventory. So oil prices cooled off. Around oil currently stands at around $81 a barrel, just above the $81 a barrel mark, and Brent is at $82.50 a barrel. Gold, obviously expected to rise, has gone up. Gold is at around $1,853 an ounce, around 1% higher than where it stood yesterday. The dollar index also gained 1%, but this was significant because it's the steepest climb since March of 2020. Treasury yields obviously saw a spike given US inflation, with economists expecting the taper as well as the interest rate hikes to be accelerated by the Federal Reserve, especially after President Joe Biden's commentary. The US 10-year yield stood at 1.57%. That's a good more than a 10 basis point increase over yesterday from what we had seen. And Bitcoin surprisingly fell 4% in early trade. It's trading at around $64,000. That's a roundup of how global markets have shaped up over the last day or so.